What's going on, everybody, and welcome to the video. In this one, we're talking about ticker BGCP, why this stock has been catching a lot of attention recently, why I see it as a great value play, and it could be a huge performer in your portfolio, especially in a market like we're seeing right now. So before we get into that, all I ask, if you do enjoy this type of content, that you subscribe to the channel and you turn on post notifications so you do not miss out on any of my future content. Thank you for stopping by, and let's go ahead and get straight into it. So as I said, the ticker is BGCP. This is a financials company. They work with financial markets, serving other financial companies. So let's go ahead and kind of talk about what's going on with the stock right now. So you can see it's in a massive downtrend from about $4.56 all the way down to $3.80. There's a lot of talk right now, a lot of articles coming out kind of negatively. Not a lot. Pretty much one article said investors are selling off for the right reason. They're not making great returns. But in reality, the stock has only performed. If we go ahead and just look over the past year, the stock is down about 16%. The market's down a little bit more than that. Year to date, 16.48%, pretty much the same exact thing. But over the past 6 months, the stock is performing very well at 15.15%. The company has a market cap about $1.41 billion. But let's go ahead and kind of talk about some things of why I like this stock. So as it's pretty small company, only traded for $3.80 with a smaller market cap. They have a really good PE of 14.3 with a forward PE of 14.5. Earnings per share this year, next year, the past 5 years, and the next 5 years are all very, very positive. This is very good growth. Kind of when it comes to value investing, you expect to see the stock price grow as earnings grow, and this is a key indicator. Institutional transactions are positive, up 1.72%, so it is pretty good. And the target price on the stock right now sits at $7.75. So a pretty solid price target, especially that it's trading at $3.80. That's a very big change in your money. Now, are investors undervaluing BGC Partners? This is from last Thursday, December 15th. And just to show you key highlights that I got from this, BGC currently rates on Zach ranks as a number 2 a buy and an A grade for value. On this, it's set a PE of 5.07 compared to the industry average of 12.56, which is still very, very good. Has a price to sales ratio of 0.88, which is very solid, especially compared to the industry average of 2.01. And lastly, when factoring strength of its earnings outlooks, BGCP looks like an impressive value stock at the moment. So who is this company? You're probably really wondering that. BGC provides a wide range of services, including trade execution, broker-dealer services, yada, yada, yada. Provides a ton of financial services to other financial institutions and even non-financial institutions as well. The customers include many of the world's largest banks, broker-dealers, investment banks, trading firms, hedge funds, governments, corporations, and investment firms. So they offer a variety of financial services. I'll just show you on their website, financial services business provides a full range of trade execution and broker-dealer services, all the good stuff that you might find whenever it comes to this, different asset classes with interest rates, credit, foreign exchange, equities, energy, commodities, a ton of different things that this company is doing, and they're catching some attention. So to show you from their most recent investor presentation, a few things that I wanted to point out to talk about this company is their brand Phoenix, growing at an industry-leading pace. So Phoenix, whenever I first read this, I was a little confused on what it is. So to show you, basically the best way to break it down is interdealer broker BGC Partners has launched a new marketplace, the Phoenix, that allows participants to trade and execute U.S. rates, cash, and futures fully electronically, which is very good. It's catching a ton of attention right now. So let me just show you real quick. It gets about 25% of BGC's overall revenue. For the last 12 months, it's been $442 million worth of revenue. And they're seeing huge expectations for this. It's got a high margin, very good stuff. And then they did kind of just have a remerger. They went from an up C to a full C corporation, increase simplicity, provide operational capital synergies, and reduce corporate costs. We'll look into this real quick, but their costs have gone down by a ton recently. Strengthening macro environment, in their industry, overall markets trending toward a stronger macro trading environment despite uneven growth across the products. And they still expect sustained levels of higher secondary market trading in their services, which is very, very good. So this is also the 8th consecutive quarter of year-over-year adjusted earnings margin expansion. The overall margin pre-tax is 19.9%, and for Phoenix, it's 30.8%. Now, I do want to show you real quick their financial statements. Their revenue was down about $6 million quarter over quarter, but their net income was up incredibly well. Okay, net income for fully diluted shares is up 164%, and just lost the net income from operations before income taxes was up 192%. They went from negative 20 million to positive 19 million. Fully diluted earnings per share is 1 cent per share, but post-tax adjusted earnings per share is 16 cents per share, a huge increase. And even though some revenues are down, the main reason for this is them being able to reduce costs incredibly. Total expenses for adjusted earnings decreased by 16.3%. So a company keeping revenues relatively flat, you're not going to expect a company in the capital markets industry to make huge increases in earnings or huge increases in revenues while markets are kind of doing what they're doing right now, and also that this is not necessarily the newest company of all time. Revenues are kind of flat but still slowly increasing year over year, and the earnings are just getting wider and wider. And earnings is what really provides a company that flexibility to provide shareholder value. Revenue increasing and increasing often comes with expenses increasing and increasing, but with revenue staying relatively flat but earnings increasing, this is a very bullish sign for this company, and it also gives it the reason why I find it to be a nice value play. For the next year, we expect earnings to go from 68 cents per share to 85 cents per share, revenue to increase to $1.95 billion, about a 10% increase in sales, which is very, very good. Looking like a very bright future for this company. So to show you lastly, the institutional transactions on this company that are reported, inflow is about 168 million compared to outflows about 107 million. So this is definitely really well. For the third quarter of 2022, we're getting reports of $28 million worth bought and only 13 million sold. So as I said, this is looking very solid. The way that I am playing this stock right now is I am currently sticking out of it. A lot of the stocks, pretty much most of the stocks I will talk about on this channel, I'm not in. The reason for that is I'm playing my cash in a little bit safer investments right now. I'm not looking to add anything into my portfolio unless I find something that I have such strong conviction on that I must buy it. I'm kind of keeping my cash conservative right now in the markets. But just because I talk about a stock doesn't mean I need to buy it. But it also just provides you that opportunity. Also, just because I don't buy a stock doesn't mean you should not buy a stock. So make sure to subscribe to the channel, turn on post notifications so you don't miss out on any of my future videos. Thank you for making it to the end of this one, and I will see you at the next video.